So I want you to explain the three different kind of verticals.
So we are very revenue focused firm. Whatever we build has to translate into revenue.
What do you think are the key reasons for India being a credit thirsty country and this trend keeping up since a lot of decades?
A lot of macroeconomic data gets thrown out to us in terms of credit to GDP ratio.
Any last advice for our audience and for the budding entrepreneurs in today's generation? Like what to do and what not to do?
And I will just say two things.
Welcome everyone to another episode of Startup Stories India, powered by LegalPay, wherein we meet new entrepreneurs every week and discuss their journey and how they have built something of their own. So today I have extreme honor to invite Mr. Nitin onto our platform. Mr. Nitin is the founder and CEO of Navadhan Capital, which is a trailblazing venture in the realm of innovation and technology. Serving more than 2 lakh customers, Navadhan provides financial services to the underbanked populations. So welcome, Mr. Nitin. Welcome to Startup Stories India.
Thank you, Samad. Happy to be here.
So, Mr. Nitin, I came across the tagline for Navadhan, which is new wealth for the underbanked, which is a very interesting proposition. So I just want to dive deeper into this, and I want you to explain our audience what Navadhan is and what are you building. And specifically, what do you mean by underbanked?
Sure. So let me take last the first. So underbanked are those people who have access to bank accounts, but they don't have access to the full suite of banking services. So just as an example, I may have a bank account, but I am not able to access loans for the purpose that I need the loans. I may, for instance, assume that I am a small entrepreneur in a rural setup. If I have agricultural land, I may get a Kisan credit card. If I belong to the lower income segment, my wife may be eligible for getting a micro loan or a microfinance. But if I run a small business, today I do not have access to working capital. I don't have access to capex financing kind of. So that's the underbanked part, where you have access to banking, your requirements are not being fulfilled. And when it comes to Navadhan, we looked at this segment and said that how can we help this segment get more access to credit such that they can improve their businesses, improve their incomes, improve their well-beings, which leads to new wealth creation. Hence the name Navadhan.
Okay, great. So how has the journey been for you for building Navadhan, since you are a veteran in the sense that you have worked for the last 2 decades in the financial industry and been CEO of various major organizations as well. So how has the journey been from a corporate life to setting up something of your own?
Well, it's been full of emotions, full of passion, full of compassion. It's been pretty exciting, honestly. I think through this journey, we've had enough trials and tribulations. One of the biggest trial was that as soon as we started, we had the COVID season hitting us. But that whole thing turned into an opportunity because we spent good 2 years initially in the life of Navadhan to build out our tech platform. So we invested heavily in terms of both our time and energies to build the tech platform, which had both the retail customer side of enablements as well as the lender side of enablements to make the markets work, or the informal markets work for the financial service providers. We did all of this work first 2 years before we actually started operations. And once the product was ready, and we call it as ascent tech platform. Once the ascent tech platform was ready, we did the first release about 3 years back, and we started lending operations. We were also very cognizant that RBI is going to come down heavily on fintech space and regulations will roll. Hence, the other thing that we did during the first 2 years was take an NBFC license. So we built out the tech platform, the NBFC license, and we started. And after that, the journey has been exciting. I think the response from customer has really overwhelmed us. The response from our team has been very, very kind. The mission alignment, all of that has really worked for us. And I've been lucky to have, a wonderful set of co-founders who have led the team beautifully and, kind of further proliferated the mission by having like-minded people joining the team and joining this whole mission.
Fairly understood. So a couple of questions to that. So you mentioned that you first built the tech platform for the initial 2 years and then you took out the license and then you started your lending operations, which in contrary is to many other fintechs, wherein they first start their operations and tie up with a lot of NBFCs to start their lending operations. So was that a conscious decision, like you would first get the license and then start your operations?
Well, I think that's the correct way to go about it. First you build the processes, build the tech platform, and then start the business. I think most of the fintechs do it that way. By just getting a license does not mean we had the access to funding. License was just to make sure that we
Yes.
are a regulated entity. While we also had to follow the same suit of going to NBFCs and banks and tying up with them. So as we speak, we have 20 lender partners on the platform. They're essentially bank NBFCs, which participate with us. Having the license is just an additional benefit to us. One, it makes us regulated,
Yeah.
and therefore we are the good boys and following the rules of the game.
Yes.
The second is it allows us to do
Right.
co-lending along with some of our partners.
Because we see a lot of days like RBI is heavily vetting the compliances of all the fintechs, like we saw what happened with Paytm. So I think that's the right way now to go about it. That first you build out your tech platform and be a regulated entity, and then commence your operations in such a way that RBI does not poach you or hunt you down in the longer run. So one thing I wanted to bring right upon is, how is your tech mechanism different from other fintechs or lending companies? Because you yourself also have a bit of a background about the tech. So how important is tech integration into Navadhan's operations?
Well, I would say tech is the starting point because we are a tech-first business. So if there was no tech, we would not have a business in place. Very clear at the start that we are building a tech platform for the purpose where we are catering to the bottom 2/3 of the population. So this is a tech for purpose platform in the sense that most of the solutions that we have built are such that while the rest of the fintech world is busy, handling the top 1/3 of the market, we are looking at the bottom 2/3 of the market, which is less digitally included, and building solutions so that, those informal markets, those bottom 2/3 of the economy can be brought to the mainstream using technology as an enabler. Now, in a lot of ways, this is an ironical statement, but it is true that unless you solve tech with tech, it is not going to get solved. So that's exactly what we're doing. We're building tech for purpose,
Right.
such that it solves for the segment and, makes it a non-linear business.
And since you are catering to the bottom 2/3 of the population, so how important is the trust factor in such a lending business? Because we see that those population relate more with banks and less with NBFCs, which was the scene in the last 2 decades, if I see the Indian landscape. So how were you able to generate that trust with that 2/3 population?
Well, trust is not a function of being a bank or an NBFC or a fintech. Trust is a function of reinforcement of delivering on promises. So I wouldn't say just by being a bank you get trust, because people are disenchanted by not being able to smoothly deposit cash. Forget about accessing other financial services, because there are challenges of operating a bank branch in rural areas. And therefore banks find it very tough to provide the same quality of service that they do in urban spaces. It's very rarely people appreciate the fact that just depositing cash in a bank branch in rural areas can itself be a task, can be challenging, and it comes at a cost of, loss of livelihoods at times. Having said that, trust is extremely important in financing business. Trust comes from service quality. Hence, irrespective of the type of business you are, if you're dealing with consumers and if you deliver on your promises and you do responsible business practices, that's where, RBI's fair practices codes also comes in. If you follow responsible business practices, if you're transparent about your charges, if you regularly follow through, if you have turnaround times for service qualities to be maintained, the customers do come back. I think a very important element there is also, trust begets trust, right? So while service quality ensures trust, trust itself builds on more people having trust. And especially in rural and the informal markets, the word of mouth spreads very, very fast. So it has a compounding effect in that sense.
Understood. Fairly agree. And You mentioned that you have 20 plus lenders as of today onboarded with Navadhan, which includes a lot of major banks and NBFCs as well. So I want you to dissect the supply side of the business in the lending space. How tough is it to get suppliers on board when you're just starting out a new venture? And since you're catering to that portion of the market, which other players are not very much focused on. So how difficult was that journey and how is it now? Like, has the proof of concept been installed and now it's easier to get partnerships in that sense?
Well, for Navadhan, getting partnerships was never tough. It was always good. It was always easy part. I think the challenge has been more in terms of how we have managed to build on the execution side. I think it comes from the fact that we are not fresh blokes out of college who are trying to do lending. We are people all with gray hair. My co-founders are people who have spent, long years in the space. So we enjoy that kind of relationships and enjoy that kind of trust with the banking system. Having said that, every journey is a new start and it starts from zero. To that extent, what we have delivered so far in the last few years has helped us, their trust, repeating on the word or playing on the same word. And we have sufficient inbound interest in terms of expanding partnerships. I think one of the key reasons also is because the assets that we are generating, the type of loans that we make, are all qualified as priority sector assets. And there is sufficient demand for priority sector assets in the banking space because that's what most banks have. That's number one. Number two is we have managed to maintain good portfolio qualities through a very strong underwriting and, customer service processes. So those two things have helped us attract enough inbound interest on partnerships. And it's upon us to, continue to strengthen the platform, strengthen the capability and the throughputs to get to more and more partners.
I completely agree that when you mentioned that you're not blocks out of college who are starting a lending business, you have been the veteran in that space. So it really acts as a benefiting point when you're building something of your own. So now there are a couple of interesting questions in my mind regarding the 2 points you mentioned. So first I'll come to the underwriting part because you mentioned that I also saw on one of your LinkedIn posts wherein you mentioned that underwriting will win the race in the long run. And we also saw the article wherein Mr. Dinesh Khare, who is the chairman of SBI, said that unsecured loans not a worry for SBI. So he said that their unsecured book is more safer than their secured books, which was like an ironical statement to many of us. So please, I want you to dissect this and I want you to dive deeper into this. And what role do you feel underwriting plays in any lending business and specifically for Navadhan?
Well, sure. So these are two different questions and let me take them one at a time. On the unsecured, secured part, there are two schools of thought. One school of thought is because the word secured mentions secured, people think it is more secure. Well, that's never true. Then if I give you a loan with your house property on as a pledge to me, I can probably get it vacated. But if I do that same thing in a rural area, or if I do that with a shop, which is a livelihood of a person, even the courts wouldn't allow me to make the person vacate the house. So secured lending in India being more secure than unsecured is a misconception. There is a regulatory arbitrage that secured loans NPA recognition can be delayed. And a lot of people think that it means that you don't need to worry about the portfolio quality of secured versus unsecured. For me and players who have a long-term view, we would rather more worry about our service quality, our collections capability, and not worry about secured or unsecured. And hence I come back to your original point of underwriting. Well, underwriting becomes naturally lenient in case of secured lending because you're relying on the value of the underlying asset being pledged. While doing unsecured lending, you need to really slog it out and develop mechanisms, templates, understand the livelihoods, understand the cash flows, discount it for various risks that could come in future, and build a robust model. The way we have done it in Navadhan is use tech for that purpose. So we are in an age where enough data and digital footprint is available. It may not necessarily be fully sufficient to underwrite, but to the extent that the digital are available and data is available, we have built tools and mechanisms to underwrite based on that. So, for instance, we have developed an artificial intelligence wrapper around the credit bureau raw data, where we do not rely on the credit scores offered by the bureaus, but do our own credit assessment after cleaning and scrubbing the data and arriving at some intelligence. We have a machine learning model around agri cash flows predictions. We have templatized some of the regular rural businesses where we are able to do better predictive cash flow analytics. We understand rural household economics better and which indicators play over the other. For example, in a rural household, somebody falling sick is a massive risk. That's one risk which you cannot underwrite.
Yes.
But you can definitely underwrite risks associated with migration, ability to do multiple income generation, ability to have more entrepreneurial behavior at a household rather than otherwise. Somebody stays on a rented premises or a old premise. So there are indicators which can be used as surrogates and discount. So we have built models around each of these. And fourth, but quite important, is also looking at the credit tolerance that my lender partner offers, and therefore converting that into business rule engines and passing the cases, through a credit engine, as we call it. We call it credit allocation engine, where the relevant credit tolerance related cases can be matched to relevant lenders who are participating in the platform. So there is a massive tech play out here, which is ensuring that there is consistency and there is high level of rigor in taking credit decisions.
So, Mr. Nitin, one thing I noticed, like, apart from your 20 plus lenders, you also secured 2 rounds of funding during the funding winter, which is like a commendable achievement in itself, because I believe you were the only fintech to close 2 rounds of funding during that particular phase. So I wanted to come across that how tough it is for a founder to raise 2 rounds of funding when the entire funding in the capital market has dried up, and how it significantly impacted your operations. Like, how crucial was that funding in securing to, enhance the operation and scale up the operations during that phase, which is particularly a lean phase in the startup world?
Sure. So, why we didn't, you're right. Empirically, we did close 2 rounds last financial year, last calendar year. And, in fact, we've closed 5 small rounds in last 2 years. But that by no stretch of imagination, says that we are experts at it. We are not. We are also learning. Having said that, I think one thing that has worked in favor of Navadhan is that while we are in the lending business, we have kind of tried to make it very capital efficient. The fact that a lot of my origination sits in the balance sheets of my partner NBFC and banks helps us be more capital efficient and allocate lesser capital. The fact that our FLDG shares are very, very limited because we have shown good quality portfolios or good collection efficiencies has been of help. All of these factors reduce your need for more capital. And when you need less capital, you're more comfortable to raise money, because you best raise money when you don't need it and not when you desperately need it. So you've been, in that sense, comfortable raising money before we needed the money. And hence, that's been our journey. But by no stretch of imagination am I suggesting that we are experts at it or we know how to do it. I would say we are also learning in this process.
And how crucial is that for scaling up the operations, even though you raised funding before you needed it? So how do you plan scaling up your operations?
Very crucial, because extremely crucial, Tanmay, because, go forward, these are businesses that are being built for next 20 years. These are not the businesses that are being made, built to say that milestones till we go to the next stage of funding. When you're in a very long run and we're planning a long race and you're planning a massive scale up from here, so we've grown about 50x in the last 2 years. We want to grow another 50 to 100x in the next 3 to 4 years. If that's the kind of aspiration, it always helps to have sufficient capital in the kitty, both from a risk protection standpoint, as well as from making timely investments in your tech, in your platform, in your channels, which can help you achieve that kind of scale.
Okay. And coming to your customer audience for Navadhan, I noticed in one of the articles wherein it stated that your customer segment is a layer above the microfinance segment and one layer below the traditional MSME sector. So like it's such a niche segment. So I wanted to know what was the specific reason for targeting this customer audience when you started out and what potential this segment has for the Indian landscape.
Sure. So, India is growing, right? So the middle class, so to speak, in the urban area is also part of the aspirational class. Development
Yes.
has not remained untouched in rural as well. Rural is also. So while back in the days there were only rich and poor in the rural areas, now there is a whole lot of shade of grey. So there are a lot of people who were not so well off earlier who are now rising up the ranks and they're aspirational class in rural areas. Having said that, the markets are still largely informal. They're getting formalized very quickly. We are becoming a channel where informal markets can approach to the formal markets. And therefore, that's the role that we are playing. Why did we choose this space? Is very, very simple. Both me and my co-founders, we have worked in the lending space or in the banking/financial services for, varying number of years. Personally, I've been there for almost 2.5 decades. We have seen how the markets have evolved in this space. Two key developments happened. One was that this is no longer a seller's market. Customers are becoming more and more discerning. They want to have choices and they want to exercise those choices. The access and availability is improving. Having said that, still the right credit is not reaching the right place. That is one key development. The second key development is that the public tech rails have now become very, very effective. It's playing out in the urban space. The whole UPI surge, the whole smartphones and all of those things are playing out in the urban space. It's yet to play out in the rural. And we are one of those early players who's going to make it work and leverage on the same playing out in the rural space. Hence, it was a no-brainer for us to kind of choose this. We have seen that when the customers get discerning, they're also getting discerning because even from microfinance space, people are graduating to take larger loans. Their businesses are growing in size. Having said that, they're yet to get to the formal space where they have financial statements coming in. They're still, at times either close to the GST filing stage or yet to begin GST filing, not that large enough. So that's a massive, I would say almost 12 crore households in India. This is larger than the SME market itself. We knew the TAM in terms of the size of the market being very large. We knew the fact that this is a customer segment where digital footprints in terms of credit records are available. What we need to discount is the surrogates and the behavioral traits. And that's where my team brings in this capability. Right? So the tools that I mentioned to you, where we have used traditional knowledge to convert it into technology and tech-led tools and tech-led intelligence is where we thought we would have a play and an early mover's advantage. Hence, we decided to choose this space.
Very interesting. Very interesting because we don't look at from that lens. And when you look at it from that lens, it becomes pretty evident that you enjoy that first mover advantage into that space. And you mentioned that you knew the TAM from the beginning, that it was huge. So would you say that this market has the potential to accommodate 2 or 4 major players if they foray into this space?
Well, I won't say 2 or 4. I would say it has potential to absorb many, many more players than just 2 or 4. It's a very, very massive market. A lot of agri-techs are working in the space. A lot of fintechs are trying to do inclusive finance. A lot of microfinance companies are trying to offer services above their layer. We ourselves are working as an extended arm of small finance banks, and VFCs. There's a whole lot of interest. The good part is the days of exclusive delivery of services is over. And now the whole financing system is very collaborative. So earlier there was silos, what banks would do, what NBFCs would do, what fintechs would do. But as you go forward, you would see that fintechs will become banks and banks. Our niche is going to be the understanding of the rural small business and building tech for that purpose of underwriting them. But we would ourselves be working in collaboration with a lot of people. So it will be a whole lot of collaborative effort. I was just having a very detailed call in the morning with another agri-tech firm exploring a collaboration. So there is going to be a whole lot of overlaps and therefore a lot of players coming in. Market is massive. And I don't think we are fighting for wallet shares yet. India's economy is just opening up, and the bottom 2/3 of the market is yet to explode. Right? It's yet
Yeah.
to see its explosion. So once it really require whole lot of more service providers and players come and service from various vantage points.
You have built the tech, which not only can help you, can also like help other fintechs or banks in managing their technological aspect, right? You built ASIN and you have three verticals which can help, which can cater to various type of customers. So I would want you to explain the three different kind of verticals that you offer, that are which you have mentioned on your website, and how it can help other firms better their tech.
No, sure. So I think we are very revenue focused firm, first of all. While we are building on the tech opportunity, we are also very cognizant that whatever we build has to translate into revenue. Hence, for us, while you spoke about three segments, there is a bunch of sub-segments underneath.
Okay.
Which one to play and when to play and which sequence to play is a revenue-led decision for us. And hence, amongst the three segments that you see, Encash, which is a soup of lending products, it's the one that we have taken to the market first. We have a few loan variants underneath, which allows us to take care of a bunch of credit needs of those customers. But the same customers, besides credit needs, also have liability requirements, also have requirements of micro savings, micro pensions, investments. Same household and the same business has those requirements. We want to come and fill in those requirements, and hence the Navadhan product comes in play. I'll just give you an example. Recently in some of our customers who were growing garlic, they have had windfall gains because the garlic prices went up. Now, when these customers have got windfall gains, typically the extra incomes they make are going to get either invested in real estate, some of it will go into wasteful expenditure, and some of it, would just be used to retire loans or gold purchase. Opportunity to do investments outside real estate or outside just buying a car or, basic household goods is very, very limited. We want to be the door for them to participate in digital investing and digital savings products, be it backed by gold or be it backed by other instruments. Having the outreach and the network and the trust of these large number of customers, it allows us to offer them services beyond credit, which includes, like I mentioned to you, savings, investments, and others. And that's the goal objective. Now, while we do these types of financing, we also see the customers requiring support in improving the capability to run their businesses. Now, we cannot go and train a farmer to say, how do you grow garlic? We cannot go and train a dairy farmer to say, how do you produce better milk? Or, tell somebody who's let's say, making wooden furniture, how do you make the furniture better? But what we can do is figure out where data and tech can help them run their regular businesses. Hence, we also participate and offer them tech solutions efficiently run their businesses in terms of record keeping, in terms of bookkeeping, in terms of their invoice management, in terms of their payments, and a few bunch of other activities where the NTG vertical comes in here. So these are largely the three verticals. And Cash stands for lending, and Dhan stands for all financing outside lending, and Digi stands for tech tools for making our customers run their business more efficient.
Thank you so much for that detailed explanation. And I think that circles back to your point, which you mentioned earlier, that this would be a collaborative market wherein many of the players would be seeking collaborations with many players to serve the market as a whole. So when you talk about your investment opportunities presenting, so I'm assuming you must have thought of it that you may have to tie up with a lot of mutual funds, maybe brokers, maybe other, digital gold platforms to present those opportunities to such niche segment. So I think that point which you mentioned, that it all circles down to a collaborative effort to help this niche segment grow forward. So, like, what trends do you see in today's lending landscape? Like, you, from an unbiased view or from a lens of a common man, what trends do you see in the lending space, wherein most of the NBFCs would be focused on, apart from this two-third niche segment that we mentioned?
Sure. No, see, first of all, I want to kind of get away from this whole conversation around NBFC versus fintech versus banks. See, all of us
Yeah.
together are service providers, and these names are a little confusing because a fintech could be a
Yeah.
bank, or a bank could be a fintech, or an NBFC fintech. Most of the fintechs are ending up taking NBFC licenses, so let's
Yeah.
not differentiate it on those bases. It's eventually customer service, some purpose that is being served, and is it being served tech-led or is it being served, purely human-led is the only differentiation. Having said that, since your question is in terms of what trends we have seen, I think one of the key trends I would say is that given the trust factor, regulatory compliances are going to be extremely important. And these are not risks. Playing the game right way, playing the game with the rules is important. And it's a 0-1 game. If you don't follow the rules, you're out. It's as simple as that.
Yeah.
Hence, being regulatorily compliant and following the rules of the game is important. I must also differentiate that there is a law, there is a rule, there is a norm, there is a direction. All of these are not same
Right.
words. Quite often we get confused, treat all of them as overlapping. Hence,
Yeah.
it becomes very important to read in the spirit of the game. So what is the spirit of the law? What is the spirit of the rule? People try to find arbitrage in between lines and sentences, in rules and directions and stuff like that, and try to build cheeky businesses. I think it's a bad idea.
Right.
Sooner than later,
Yeah.
regulation will come. And it will allow you to innovate. But once you have innovated and gone to a scale which is beyond the tolerance limits, problems will come. So that's one clear direction which is visible today. The other direction I would say is customer protection and responsible services. Customers will make a choice. They will access product from you. They will take a loan from you.
Yeah.
But are they repaying the loan to you or not? It will be a customer decision. Be it a secured
Right.
loan, unsecured loan, BNPL product, consumer credit, you name whatever you want to call it. Are you getting the money back from the customer? Is the customer deciding to pay you back?
Right.
Is going to be a key trend. And therefore, when we build a service provision, we need to make sure that we build the full service circle. We just don't go look at GTM and CAC. We have to look at the full service
Yeah.
provision to say that the money has to come back as lent further. I think these two trends are very designing, very, very visible to me.
I completely agree with the view that you have to think of the end once you begin, right? So coming back to your point that it's a full circle. You can't just think about the GTM and the CAC and your lending operations or supply partners, but you also have to think of the end that money has to be credited back in your account or your lender's account, right? So I believe that's a very important perspective, I would say, that we have to look at once we think of these service providers catering to different needs. So one thing that I've heard the most, and I'm sure you must have observed this trend, that India has always been a credit thirsty country. Like one reasonable guess is the population dynamics, which play a vital role in this. And what other reasons could you think, you would agree that this trend has been keeping up, that India is always a credit thirsty country, and thus innovative products or different services can be opened up and it will scale up massively. So what do you think are the key reasons for India being a credit thirsty country and this trend keeping up since a lot of decades?
Well, yeah. So, a lot of macroeconomic data gets thrown out to us in terms of credit to GDP ratio, household incomes ratio, and so many other ratios which tell us that we are a credit thirsty country or a credit hungry country. I have a slightly different take on this. I think there are pockets of oversupply and there are pockets of shortage, both coexisting in the market today. I think it is because lending or credit has become commoditized, has become productized, because of which some of the products which have scaled up have become priced and probably in oversupply, while some of the requirements which are underserviced are still in the realm of, having massive demand. For us as practitioners, it is important to identify those trends. And therefore, we need to keep our eyes and ears very close to the ground. We need to keep traveling. We need to keep meeting people. We need to keep understanding how the market is evolving. A lot of people sitting in Bangalore looking at their mates and their drivers take decisions of how India is behaving. Well, the Bangalore mates and Bangalore drivers, it's not India. Right? So India is, in Ostpaint, which is 300 kilometers or 400 kilometers away from Bangalore, how a rural small business is trying to service their working capital requirements, how their fabricator is trying to buy a welding machine and not able to have money to do it, how a dairy farmer is trying to pour milk, but the cooperative milk pouring center is not close by it. He has to sell it to the aggregator, where the terms of trade are not favorable. So, the meat, or let me say the cream, lies in the detail. If we understand the requirements well, if we are able to find the right pockets, then we can make it a large play, and that's where the hunger for credit lies. But if you look at how microfinance has grown or how consumer credit has grown in India, today it doesn't matter. Even if you have a 10,000 rupee loan, you're a security guard somewhere, you don't have any job security also, you still get a good consumer credit. You will repay that loan or not is your choice, but you get the credit. So access in some of those, for example, the blue collar economy, access to credit is overheated. So we need to identify which are the areas, which are the gaps. But at a summarization level, I will say, right credit at the right time, at the right terms. If these 3-4 things are taken together, then there is a lot of credit hunger and we need to fill it. But otherwise, there is enough supply. There is commoditized credit, right? So every year, people fall short of their credit disbursement targets. There is enough being supplied.
Yeah, that's an interesting perspective to look at once you bifurcate these two different segments and look at it from each individual segment. Then it makes sense that one is oversupplied and one is undersupplied. So, Mr. Nitin, I wanted to talk about how were your initial days in your career? Like you were with the Times Group for a couple of years, and then you moved up to the lending space, and then became the CEO of Intelligro and Spandana Spurti as well. So how were the initial days, and how did it help you massively build out something of your own?
Everybody tries to romanticize their initial days, but I would say my initial days were a lot of struggle. The newspaper industry taught me how to be awake all night and not really worry about concepts like work-life balance, because that's how the industry is. Having said that, media also brought me to a lot of disenchantment about the realities of life and what is portrayed and what is right and what is not. To that extent, I think knowing the reality was something which hit me hard. And when I got into rural space and I started traveling into interiors, I realized that there is so much scope to work on. And your heart doesn't, need to be bleeding for the rural poor. You need to go out there and do some work, make some meaningful contribution. So I think I've been lucky to have those kind of occasions, job roles, where not only in India, but across a lot of, other, I would say, middle-income countries. Also, I got an exposure to see what's happening. In banking itself, I got to run products on the product tech side, microfinance, gold loans, channel finance, which now is called DNBL, corporate and retail businesses, those kind of products, to see how markets play between the informality of the business and the formality of the business. So, I would say formative years or initial years were great learning experience. I got to travel into deep interiors. I stayed in over 200 villages in the first 4 years of my career, across various states in India, and like I mentioned, a few other countries as well. It's quite a revealing and quite a learning experience. I come in from the state of Uttar Pradesh, and when I was staying in villages in places like Uttar Pradesh near Madurai or Nagarkoil, the commerce was very different. Or if you go to Malappuram in Kerala, you go to Kutch in Gujarat, it's not the same place, it's not the same variables, it's not the same country. It's very, very diverse. Understanding the diversity and still pulling on common traits to build a common service provision, I would have been able to do today had I not had those kind of experiences in my
And it all circles down to your point of completing the whole circle, right? When you look back at those days, then you realize that today it makes a lot of sense having those experiences, even though they would have been the struggle at that time. So, Mr. Nitin, like, what are your aspirations and, grand vision statement for the next 3 to 5 years for Navadhan and for you personally as well? Yes.
Revenue that we get from customers is one of our North Star metrics. To say that in the next 4 years, what is the figure that we want to reach? We had set this target out for ourselves 3 years back. In this 5-year journey or 6 years journey that we had set out for ourselves, we are bang on target as we speak.
Great.
So I think we are building it out for the purpose. The purpose is to build scale. Some of our people who work in the traditional lending space, I would say what they achieved in 20 years journey, I want to make it happen in 5 to 7 years.
I think that's that sort of aspiration is what we require in today's generation, that you think on those lines wherein you can, I believe it was Elon Musk that said that if you can reduce your 10-year target to 1 year, you may not be able to achieve it, but you will get far ahead than you would have gone in 5 years. So I think you are right on that track. And I hope that you achieve the target in the next 4 years, which you have laid down the number for revenue for your business. So any last advice for our audience and for the budding entrepreneurs in today's generation, like what to do and what not to do? A couple of things or generic advice.
Well, I will just say 2 things, and this is not advice. This I would say is things which have helped me in my life. I can just share them as experience and not really call it an advice, because I don't think I'm an authority yet to give any advice. See, one thing that has worked for me is this very, very crystal clear focus on revenues. Whatever we do, it has to result into a revenue. A lot of people say that you build a great product, revenues will come. I do not belong to that school of thought. I would rather say it has to serve a purpose. It has to generate revenue as it's built for it, is how I look at it. That's number one. Number 2, I would say that, entrepreneurship is a lonely journey. And it can get very frustrating. It has exhilarations. And it has its own pains and pitfalls. It's extremely important to have right quality of co-founders. If you find the right quality of co-founders, if you can get the culture fit right, they help you in turn build an institution. My job here as the founder of Navadhan is not just to build out a business. It's also to be an internal culture mascot, to make sure that what we're building out is going to last beyond us. We're building it for scale. We are building it for stable profitability. And we are building it with a clear focus on good quality customer service. Because if we do not give good quality customer service, customer is not going to come back. Customer is not going to continue to pay for it. So I think these 2 things, I would say, have really helped me. I hope, it helps others as well.
Yeah, I completely agree. And I also feel that which school of thought that you have, that focus on revenues from the right get-go, right? Because we have heard a lot that first build up the product or service. And if that's good, your revenues will come either in 2 years, 3 years, or 5 years. But that school of thought wherein from day one you are focusing on revenues, I think that helps you build out a very long sustainable business and helps you massively scale once the customers have tested the service and they become your regular customers. Thank you so much, Mr. Nitin, for your time. It was quite an insightful discussion, and I'm sure I've taken away a lot of interesting perspectives, and our audience will too. So thank you so much for giving us your time. I wish you all the best.
Thank you so much, Tanmay. Thanks for speaking to me. I had good fun in the process. Great. Thank you so much.